I know you folks out there, I know you're just like me, been looking at your bracket. Looking at your bracket, all you care about is the NCAAs, the basketball tournament. You want to win a $30 pool or whatever it is. Spend more time. You should spend as much time looking at your bracket as you do your portfolio. Chuck Jaffe is here with us. Well, he's not here with us. He's in Boston. He's on the show, though, to tell us all about how you could make your portfolio better if you spend as much time as you're working on it as you do your bracket. Chuck, how are you?
Something like that.
I'm doing good.
Something like
I'm
that.
doing good. And the bigger point is, I think you could make the problem is that people pick their investments the exact same way they pick their brackets. And the truth is,
Well, that's not good.
up until a couple of days ago, there's some schools that you were making decisions about that you'd never heard of.
Yeah.
So, that's the same sort of way that happens with mutual funds. They're looking at what's in their 401k going, I've never heard of this fund. I've never heard of that fund. What do I do?
Or just because they've heard of it, right? I mean, look, I heard
and often that's really the problem. They will sit there and say, oh, well, here's the big name company. And sometimes we wonder as folks who cover the industry, we'll take a look at, here's the worst funds from Vanguard or the worst funds from Fidelity. And you're going, there's billions of dollars here. How does that happen? And you have to believe that some of it happens because somebody's out there going, okay, I'm looking at this list. I don't know, but here's a big name. It's got to be good.
Yeah,
the same way you can look and go, here's a Big Ten school. Must be good.
I'll tell you, I saw on the list, I saw Harvard. I thought, Harvard. I heard of Harvard, right? They could do.
Chuck, when I was looking at this, I'm thinking what you always hear from the fund industry, and that's past performance is no guarantee of future returns. And maybe a lot of people pick their NCAA teams looking at what's their record going into this thing, and it seemed like you were getting at that in here too.
Well, the funny thing that you mentioned about that is that not only was I getting at it a little bit, because of course you want to do more than just past performance, but that's actually my next column. The one that's coming this weekend is talking about how we just passed the bottom, the 3-year anniversary of the bottom. So a lot of track records are now cleaned up. And that's where track records become really misleading, is that, now you look at a fund over 3 years and it looks brilliant. But of course, you've now excluded in a 3-year track record the 10 months that were, 10 of the worst months in market history. So, that's exactly what happens, is that people are looking at it and they're going on this minimal information, or they're waiting for some talking head to come out and say, buy this. But of course, the talking head's advice changes all the time. I mean, if you watched ESPN getting ready for the tournament, could you tell me which of those guys had the best record last year? Like, who did a good job picking last year's tournament? Because I haven't heard anybody say it so much as once. So how do you know who to follow?
Hey, Chuck, is that a bracket you have on that whiteboard behind you? Is that your bracket?
No, it's not my bracket. I do have a bracket, and I think I could make about $30, just like you said. Yeah. And I can tell you that functionally, I pretty much picked chalk. I went with mostly favorites. And here I am on day 2, not in first place, but with the most possible points left. And that was my strategy.
So is it quickly, because we're running out of time, is there a way that you could do both these better, smartly, pick your portfolio and your brackets?
Yeah, I think the real thing is sort of get to a spot where you know enough with each pick to truly be comfortable, where you're not relying simply on past performance or somebody told me to buy this or this is the big name that I understand. There has to be something in here that's going to wind up giving you conviction to stick with it, because unlike the tournament, which is over in a couple of days, and unlike the investment that you make, which is small and not that big a deal if you lose, when it comes to your investments, it's a very big deal. So you have to have something that actually gives you courage to make your pick, and not only make it, but then live with it.
What if you just go with the tide? Like everyone's picking Kentucky, everyone's picking Apple, right?
As a general rule, if you wind up getting into funds when everybody's getting into them and they're hot, they're just about to change direction. So, I would tell you that becomes the problem. Again, in the tournament, it's pretty easy. But in real life, when you've got to own it for the next couple of years, around the time that most investors figure out, hey, look what's doing well, I should get into this now, that's around the time that the market has figured it out and is about to change a little.
Right.